What's going on, guys? It's a Zoomer Value Investor coming back at you with another video. Gonna try to do this one quickly. I always say that and then it ends up being a really long video, but I'm just gonna do a Q4 update. I know Q4 just started at the beginning of this month, so on the little YouTube portfolio I started back during Q2 of this year, and I know I said I'd do an update. I try to do it every quarter, but I certainly will do them. I just I was very clear about prefacing that they weren't going to be particularly structured. They just will get done. So yeah, here's the portfolio. 1K portfolio. And I'm liking where we're at so far. So, the only reason I'm saying that is because compared to my benchmark, the S&P 500, I'm doing fine. But because, outperforming the S&P 500, that's not saying much right now. That's the type of market we're in. So, I'm just going to go through kind of like what I'm holding and why I think I've done more or less pretty well. So yeah, here's the portfolio in all of its glory. It's a minus 6.5% right now after all that time it's performed, but compared to our benchmark, it's down over 11%. So I'd rather be in the category of I'm only 6% down and I know what I own. And I think it's really important to just kind of stick to like Peter Lynch, Warren Buffett type principles. We're not under diversified, and we're also not diversified here. Kind of keeping it between 15 to 20 holdings. I can stray from that number if I want to. Just kind of depends on how I feel, but more or less I'm going to be focal around that amount. You still have significant capital in all these positions that you're going to hold because you're not holding 50 of them. You know what I'm saying? You're not holding 500 of them. One of the things I really want to point out that I think really led to the success I've had at this point, about 2 quarters of performance so far, was a lot of that time I spent actually just sitting in cash, the cash that I had in the account. So as you can see here, I started the account on 4/22 instead of investing all that money right away and going for gains right away. And keep in mind, SPY corrected at this point. The S&P 500 index was over 10% down. It was just a judgment call that I just thought with the volatility, there could be more room to go down, and I kind of wanted to hold a lot of cash at this point. So of the $1,000 I started with, I really sat in cash with most of it from the start. I bought 3 of my highest conviction companies at first with $50, PayPal, Meta, and Google. All the rest of the portfolio just stayed in cash, and I bought offers as they came to me. For example, a few days later, I was nibbling on Amazon. A few days later, I was nibbling on Warner Bros. Discovery. Then I just kept that process going. I waited. I was patient. But I'm just excited for the long game. I mean, this is nothing in the grand scheme of things. I'm trying to do this the whole rest of my life. Doing this for only a few months, that's nothing to brag about. You know what I'm saying? So I have a lot of time to go to continue this type of behavior for myself. I am very far from considering myself a high performer at this point in my career. Only a couple years into this. With that being said, what are my plans for this portfolio here, and what future plans do I have to make other portfolios with alternative investing styles that I think you guys will really enjoy? So my final thoughts on the portfolio, I did sell Nokia and BlackRock partially. If you go back to my first video, I actually had more shares in those companies than I did obviously now here in this video. But the reason why I was a few percentages up on those holdings, and Nokia was just a lot of exogenous risk with the situation in Russia right now. Finland is actually neighboring Russia, and it's just I didn't want to hold as much as that company as I initially thought with how that situation developed. So I cut that position about in half. Somewhere around a 10% gain. It really wasn't a huge deal. It was the same thing with BlackRock. I only got about a 10% gain on it or something. Bought it around $500, sold it around $600. And really, I really only just bought BlackRock for financials exposure. I was kind of ill-educated about other financials options in the space, and I'm actually more attracted to Citigroup than BlackRock by far at this point, as far as what I want to hold. I think with Citigroup, it's just a valuation thing, a lot of valuation arbitrage. You look at Warren Buffett started buying it. I really think there's a margin of safety on the business. I definitely did not feel that way about BlackRock, and that led to why I about cut that position in half as well. Although I do really like that ownership of that business for the long term. One of the largest U.S. steel makers, Nucor, I think they'd be a great add around $100 or lower. I do hold a little bit of them in my personal portfolio, and I would be adding to probably both portfolios if it goes around that price. I think CVS will get really attractive to me around $90. I think it's a very much a different play than Walgreens. Walgreens I think of more as valuation arbitrage. You look at it, it's got the lower price to earnings ratio. There's more room for instant, more sudden price discovery. Whereas CVS, I believe it's a better growth story. I believe it's also got better management under it. So what I think I'm going to look to do with this portfolio, is just have a pretty decent sized allocation to both companies, and that just will be like a really nice niche core nucleus of like healthcare, consumer. It's going to be a very sturdy holding. You know, those two between the two companies, diversified healthcare, consumer, very necessary sector. I don't hate that. I don't hate that. They're both going to pay me a solid dividend. Again, this is a portfolio that I'm running as if I'm conservatively managing money for someone else. It's very different. For example, if I'm managing money for my parents who are maybe 30, 40 years older than me, well, they're going to be a lot closer to retirement than I'm going to be. So I'm going to think with a whole different mindset with how I'm kind of structuring this portfolio compared to how I might structure my own portfolio. But I mean, that's the thing I really like about this account. Also really want to average out on my PayPal position. I just think there's a little bit more exogenous risk. PayPal hasn't been in the favorable side of the news, although I do think it's still slightly an undervalued asset. I just think there's better offers in the market today. I'm probably going to cut that position like in half and then probably even average out a little bit more from there. And I'm going to move some of that cash into some of my more conservative plays like Citigroup and Google. And the last thing I really want to touch on is that energy exposure is so desirable. I think that's just going to be I think even like for the next few years, energy is just going to be a very relevant sector. I got to do more due diligence on energy companies. I don't have a ton that I feel like have great margin of safety on, but I do have a few I will talk about. But I'm also going to talk about another idea I think I'm going to bring to this YouTube channel. And just if you guys have any thoughts on it, let me know. I just wanted to go ahead and share these ideas at the end of this video here. So after a couple quarters of doing this portfolio, I've really enjoyed it. And I want to do it like another $1,000 starter portfolio. But instead of the theme of me being conservatively managing money for someone else, this portfolio I'm going to invest in anywhere from, I don't know, sub 5 to 10 billion market cap companies, kind of search for more market inefficiencies out there. And it will have... just as a result in investing in those kind of lower companies who have little lower moats, we're going to have so much high risk in this portfolio. With that being said, though, we're also going to have a lot of reward potential in the portfolio. For this portfolio, I'm currently looking at Epsilon Biologics. That's one company. I've talked about this in mass, and I do hold this company in my personal accounts. You can check that out on my channel. I have some great videos about Epsilon Biologics. ABCL. So some holdings I'm actually looking at for this portfolio would also be Crocs, which I kind of have more of a $65 target, and that's kind of where my cost basis is in my personal account. But it's currently around a $75 stock. So if that comes down, definitely expect to see something like this pop up in the account. It's such a popular footwear brand. I see all my peers wearing it. And the other thing is just the financials, the balance sheet, all that just really checks out. I think the growth and the revenue growth potential is there. I think they've made some really good acquisitions recently. They also have a very subtle moat. I think with the Crocs-Lite material in the shoe is patented. So very interesting company. Again, I'm just very familiar with it. I think that's one of the things that really attracts me to it. You know, just the financials check out, the familiarity checks out. Overstock, it's more or less the same thing. It's just the valuation. I compare it to a furniture company like Wayfair, and Overstock just in and of itself looks like a more attractively valued company. But then you look into Overstock deeper, and you see that they have like crypto exchange holdings. They have like a T+2 transfer window specialized broker that can, I guess, do the T2 system like more efficiently. So maybe you're not sitting on your booty for 2 days. I believe one of those brokerages or exchanges does have some type of federal commission regulation behind it. So I think that's very valuable when you're any type of like business venture exchange and the feds are behind you like, yeah, you're regulated, you're good. So you got this innovative exchange and the feds are already like, yep, good, signed off. And it's like, well, shouldn't we maybe like price that into the business? I don't know. I think Overstock's a bit of a market inefficiency. So CleanSpark is a company that was trading around $1 billion market cap in early 2021, around the heights of the price of crypto. CleanSpark's a more or less a clean energy crypto mining company. They also do work with fuse boxes, specialized fuse boxes, but it's something like 90% or something or so their revenue does come from crypto mining. I think more specifically Bitcoin. I do not know if they mine any type of alternative coins, but they mine a lot of Bitcoin. And when you actually break it down, it's like this business is so cheap. It's around 120 million market cap today. Keep in mind, it's only spending like, this is a miner. It's got a great operation. They've actually 3x'd their total operation amount of miners, etc., their hash rates, etc., from their height of 1 billion market cap to today where they're 120 million. The operation is 3x. The amount of crypto they're able to mine is 3x, but the business is sold off from 1 billion market cap to 120 million. That's nearly a 90% drop. So let's break this down. 120 million business. They mined 448 Bitcoin in September of this year. In 1 month of this year, 448 Bitcoin. So this is the thing about CleanSpark. You know, balance sheet's not crazy. You know, debt, all that is manageable. I looked into it. But this is like the core thesis behind the play. So Bitcoin's price today is around like 19K, but if you assumed a more conservative price of 12K, talking about a company that mined 448 Bitcoin in a month, at 12K, that's about 530 million. The cost of revenues are normally only like a quarter or a fifth of the total pot. And just the fact that from early 2021, at peak valuation at around $1 billion, the company's actually 3x the operation since then. And the company is about 90% cheaper. And I honestly think global currencies are in a point where they don't know what to do. There's so much pivoting from world central banks right now. There's so much free money going back out into the system. It's like people are just going to seek answers for this whole fiat currency fiasco. I might do a whole nother video on that later because I could go on a whole tangent about that right now. But if you don't know about this stuff, please leave a comment because you might not know about how things like inflation, fiat currency, that might be devaluing your savings over time. And I really want you to be educated and informed on things like that. And that's one of the reasons, if you don't know, why people speculate so heavily on crypto, because it's more of like a rules-based currency. It's not fiat. It's not all entrust into this entity where you can just print at will. Fiat is Latin for something like let it be done, or like entrust, or something like that. Something that's just all about like giving power into like this one individual, being like the Fed of whatever. All these countries worldwide have started pivoting from a lot of free money during CV-19 to they quickly wanted to revert that back once they saw a lot of inflation going out into the system, and then they couldn't really sustain that either because of a lot of geopolitical circumstances. Basically, a lot of countries have pivoted so far except the United States and the United States Federal Reserve. They still have not pivoted yet. However, because of how in debt their balance sheet is, they could not sustain a high interest rate for that long, to be quite honest. So even the United States will have to pivot here at some point, and then a lot of free money will go back into the system. The inflation rate's going to be, again, another thing that people just of the world will have to scurry to try to like do something with their savings to yield against. And it's just people are going to search for solutions to this cycle. Cleveland Cliffs and or U.S. steel companies, a lot of it has to do with just generating a lot of free cash flow for the company to be able to buy back the stock, as well as steel's just with a lot of infrastructure and the Biden infrastructure plan. People developed a lot of building projects, especially during the lockdown. And so people are trying to put all that into action all at once right now, and steel companies are fired up and ready to work. And Cleveland Cliffs and U.S. Steel, I think there's maybe more upside compared to a company like Nucor, which I discussed in my more like safer portfolio. Transocean and Energy Transfer, these are actually two energy companies I have looked at. I just don't have a high conviction to put them in that other portfolio at this point. But I think Transocean is really interesting because they do offshore drilling, and I think the world energy crisis might come to a point where there's not really anywhere to go except really fire up the offshore drillers in a way they hadn't before. And when I looked into the company, I think it's at a good valuation. I just think there's just inherent price discovery to go. Like, I don't see why that couldn't be like a $5 stock or like even a $10 stock. Energy Transfer pays a really great dividend. I believe they own some Sunecos, produces the gas, owns some of the gas stations. That's what I like about the business. It's like a downstream business. There's a terminology for it. I might be butchering it. But as I said, healthy dividend. They can afford it. Free cash flow. Very great energy play. I do believe I would like this to kind of come down to more $10 before I really bought it. Playboy, this is a really interesting one. This is, billions market cap at one point. Super popular clothing brand, especially with my generation, especially with my peer group. But now today, they're around 120 million market cap, and not too much has changed about the business. They've been going through a little bit of marketing stuff and stuff of that nature, but I mean the brand, the IG page, like all that stuff's just popping still. So the clothing line, if you don't know Playboy, it's shifted from kind of like the naughty mags and stuff like that to it's like a clothing brand now. It's a sustainable clothing brand. They've done a whole brand shift, and they advertise a lot more to sustainability. They advertise a lot more to women's interests. I just really like the direction that the company is going, as well as the popularity is just undeniable. And for 120 or so million market cap, I'm curious. It's a $3 stock. Playboy, very curious. Unity Software, got to look into this one a little bit more, but I think it is at a very good. I don't think it's at too bad of a price. I got to look. I think if some of the growth works out for them, I don't think it's at too bad of a price. And if you don't know Unity, It is one of the most popular gaming engines out there. Probably easier for most devs to dev on Unity compared to a lot of other dev engines, which are actually more closed off to developers. SoFi, the new millennial bank, kind of interesting to me, especially at this price. They do have that stadium name out there for the next like 10 years or whatever out in LA. I believe where the last Super Bowl was played. Definitely on the lower end compared to this list, but it's on the list for a reason. It's on the watch. Palantir, really interesting company, AI data analytics. They have 3 different products. Gotham, a lot of that's for the military, like Apollo for clients, things of that nature. A lot of different like patented softwares. Very intelligent, good at figuring out solutions. Look into yourself. I might have to do a whole video on it, a whole separate video. But I think around $5 that stock becomes really interesting. I have actually like started to nibble on it in my personal portfolios. Coupang, I have a $10 target on this one. Very fast growing e-commerce and food delivery company out in South Korea. And lastly, we just got Grayscale Ethereum Trust. Just some Ethereum exposure. As I said, Ethereum is a software. I've said this in another video before. It's more of like a software, whereas I view Bitcoin more as like a digital gold. Pretty much to me at this point, an undeniable piece of technology. I think Bitcoin is just really becoming like the currency of the internet, but like the storage of value of the internet. Whereas I believe Ethereum has more of a pathway with its software and its applications, the ability for things to be built on top of it. Like it runs the NFT network. That's like a huge example. I think because of that, I think Ethereum has a chance to be maybe more used. Whereas, like I said, Bitcoin's kind of viewed as like an alternative internet asset. But if you actually look into like the technology of Bitcoin, this would be a great video for you to check out. This is Gary Gensler. He's a current SEC chairman. But at the time of this lecture 2 years ago, he was an MIT professor, and he actually gives a whole detailed 23 more or less hour course on Bitcoin that's just publicly free to check out, and you can watch him lecture about it. You don't got to take the course, you don't got to do the homework or nothing like that. But he has some really interesting thoughts here. And I would say if you're unfamiliar with the topic, I think this is a great place to start because you kind of get it from the perspective of someone who is at the SEC currently. And he kind of explains the technology behind Bitcoin very eloquently. And so what I'm saying is if you don't understand this asset, I think this is just a great place. Thank you guys so much for watching my video. I hope you enjoyed it. I'm the Zoomer Value Investor. I am signing off. Enjoy your day, enjoy your night, enjoy your afternoon, whatever you're doing. Just enjoy it. Peace.